or in the coming years. So that's something that we work very hard on at the company where I work. So this is my day job. Outside my day job, I'm also an avid angel investor. I'm a finance educated ex consultant that is all about bringing positive value add to anything that I interact with. So for me, angel investing is like a perfect place to play because it suits, let's say, my ticket preference as an investor at this stage, and it allows you to see the really big incremental benefit you can bring because of the scale that the company is at today. So yeah, I guess that's me in a nutshell.
All right. Thanks
And
for that.
I'm very thankful to be here, guys.
Great. Just before I hop to Jithu, Tania, how long have you been investing as an angel?
The past 5 years.
About 5 years. Okay,
Yeah.
it might be good to understand for people where you are in the journey. Okay, thank you for the introduction, Jithu.
Yeah, hi.
You
Hello,
the
hi.
same? Yeah, go ahead.
Sure. I'll give you a short intro on what I do. So thanks, Martin. Thanks everyone who has joined the call. So I'm an entrepreneur. I've set up 3 companies on my own in various industries of media, oil and gas, and also IoT. Apart from that, I'm into my family business. Our family business is also into PVC manufacturing of pipes and fittings called the Khalifa Group. We have factories in Ras Al Khaimah, UAE, and Kuwait. My base is mostly Kuwait, but right now I'm in India for a few business meetings and family events. So our companies in the oil and gas segment is into drilling, is into manufacturing of spares and equipments for the oil and gas industry. And we also have a company, the other company that I set up is an e-commerce platform, which can be called the Amazon, but for exclusively for the oil and gas industry. So these are the companies we have right now, and we also are getting into oil and gas sustainability, which is a soil remediation project that's a joint venture with Caltech, one of the leading American companies in this field. And as you all know, I've been into angel investments. For the last 3 years, I've been investing in various companies based across the globe. So that's me in a nutshell.
Thank you. Okay, so both different background. I think I hear a little bit of a family overlap here and there, but different industries at least. So Jithu, when you started angel investing 3 years ago, maybe good to understand, like, how did that start? Like, how did you get into angel investing?
First of all, I belong to a group of entrepreneurs who are like-minded. So we would always brainstorm, and for me, rather than invest in stocks, angel investment seemed to be a much better form of investments, basically. So I could really resonate with that. Also, as an entrepreneur, I was always interested in betting on companies. And then, of course, it took me a couple of years. So for the last 5 years, I've been seeing how best I could, invest the hard-earned money and the pool of money that I saved up. And so initially, I started off by sourcing investment opportunities on my own, because I believe in being the student of the whole industry. And I devote at least 1 hour or so during my daily routine on learning about companies' different business models. I use avenues such as Bloomsburg, ETCIO, Inc. 42, and I keep reading about companies. And I also attend networking events of startup accelerators in and around where I am.
Okay.
So this is how I started. Yeah.
Okay. So that's interesting. So I'm assuming you were looking locally. You were looking at companies locally, or you started out globally straight away?
I started off globally straight away, because I don't believe in limiting opportunities, because again, incidentally, my first investment was in a local company.
Okay.
I looked everywhere, and finally the first investment happened to be in a local company. Yes.
Interesting. Okay, and so for Tania, when you started out and maybe all the way to right now, over those 5 years, what are the channels that you've been using that you have used to source deals for yourself?
So there's two main ones, Martin, actually. The first one is just the nature of what I do on a day-to-day basis. So we have multiple companies coming into the office to pitch for investment every single week. They're usually quite high caliber. They come from like a pooled network of VCs or other partners or other members of, like, let's say, a somewhat informal private investor network that come to the company and co-invest with the company as well. Now, this is like a balance that need to be struck, because if it's happening on a company level, then there will of course be limitations to what I can do from a personal perspective. And of course, there are conflicts that need to be managed and things like that. But sometimes the company comes and it's just completely out of the, let's say, investment spectrum or investment scope of what the company is looking for during this time, or the ticket size is too small or too big or things like that. So my work is definitely a place where I get to meet such interesting companies, but also through my placement network. So I do support some companies for both super small and super large tickets, like going up to PE as well, in gaining investment and securing investment from the region, specifically with a little bit of a network that I have in Saudi as well. So within this placement network, we also share deals with each other. Usually it's, for the purposes of securing funding for these companies. But of course, I mean, if you're invested in the game and you see a company that you really feel like pushing, then you would invest yourself as well. This is what happens sometimes. And aside from that, I have a couple of, let's say, VCs or angel investment groups here whose recommendation I trust highly. So I see what they're doing. And if they pass something along and it's within my scope and my scale and fits the matrix on which I score the companies, then it's something that I go through as well. I do not spend as much time as Jithu does every day because I should, but there is a team that I have that works a lot on industry research and just making sure that we're always up to date on the trends and making sure that we don't miss out on anything spectacular. And for that, just for whoever is interested, I think Magnets is a great source as well. So Magnet always, Magnets. It's MAGNITT. It's a great source for all the investments that are happening in the region. And it kind of points you in the direction of where things are going, what are the cool companies to look out for as well. But again, this is regional. International companies, it's, let's say, a little bit more rare in my scope.
Okay. Let's talk a bit more about that also in the international scope. So Jithu, if you look back at the past 3 years, right, and then the sort of the investment that you've made, which channel do you think has been the most beneficial in this? And let's what I mean by beneficial is like the quality of the company. Looking back at it,
absolutely.
What has worked the best for you?
I would say what worked best for me is formal angel networks for sure, because when you go as part of a formal angel network, the best part is you have a great leverage. You are a group of distinguished professionals, and you have more leverage over the founders rather than go along as a singular investor. But then it's completely different with one of the other companies I have invested in. I have invested as a lead investor, and I've invested through my family business group. But we have a lot of strategic synergies in place. So I'm not just a lead investor, but I'm pushing the company in a lot of places. So there, again, it depends on the kind of investment money you're putting up. But especially for smaller amounts, I would always recommend a formal angel network or a VC.
Right. Okay, that's interesting. So I think both of you have shared that in the end of the day, it's about like having some sort of a network, right? Some sort of a group of people that you can trust, that give you something. I know from experience that it's incredibly hard to find deals, good deals, outside your network, right? This is, just statistically speaking, right? If we look at back of all the investment we've done over the years, like you always see that sort of the quality deals, or maybe even the quality founders, they come through recommendation. But we might not want to limit ourselves to that, right? Because it's also how many people, how broad is your network, right? So Tania, in your case, do you spend time actively trying to source deals sort of outside your network? Like, do you entertain that? You go out there and say, let me reach out to this company because I think they're good, and maybe I want to invest in them. Have you done
that? Maybe only one time. I usually, if something comes from outside the network, it doesn't get more than 30 minutes of attention, not due to any arrogance or anything, but usually, 30 minutes is a pretty decent amount of time when you know what you're looking for and you know what you're scoring things against. But also, there's a very high chance that with the network that we have here in the region, if no one else has heard of it, there is a reason for that. So
right?
It's just a matter of optimizing the ROI on the time you spend on things.
Sure.
So
but we can twist that. We can turn that, right? I mean, you can also say if everybody has heard of it, it might also not be good, right?
That's true. I mean, yeah, it's a double-edged sword. So there's two things here. But the other one, yeah, no. I was going to say, I was going to bring up an option, but unless it's something that comes across in my travels and then somebody brings up something that I find highly intriguing, or it's a topic that I'm super passionate about, that's the only time it gets more than 30 minutes. But usually if you don't stick to like a firm timeline, you'll just end up reading and reading. And it's I find that becomes counterproductive sometimes.
Yeah, there's more deals than minutes in a day.
Mm-hmm. That's 100% sure.
That is for sure. Okay, I have one example of myself where I had a bit of a hybrid situation actually. I was actually browsing around some websites where people were raising, and one company caught my attention, and I didn't know whether they were actually raising. I didn't know anything about them. I just liked the company. I just thought that this was an interesting company. And so what I did, I actually went on LinkedIn and I tried to find like who's an investor in this company and do I know this person, right? And actually I found that I had a common connection with the founder of this company who asked for an introduction. And then actually this turned out to be an amazing deal. They were just actually raising and I sort of just got along. So I do have a bit of a weakness for saying, hey, maybe I should look out what's out there and maybe try to hunt a little bit more. And the reason I think this needs to happen is because we must be we have to think for ourselves and say, look, the good companies might not come to me, right? As an investor, like in the end of the day, the really good founders, they might not need you, right? They might not need your money. They might not need your expertise because they might actually have a broad network. So I also feel that if you have to fight for a deal, right, it actually might be a good deal. So that's something I learned, and just a little bit of a bridge on that, right? If for Jithu, for example, like you say you get deals from your network,
so
and then yeah, let me phrase the question, because where I want to get to is like, what gives people in your network, and I'll ask Tania the same thing, an incentive to share deals with you? Why would they do that?
So I'll take it a little. I wanted to attack the previous question a little bit. So I believe you actually lose out on any opportunity that you don't see. So you lose out 100% on any opportunity you don't see. So I totally agree with Martin here when you say you might have to go out a little bit and hunt for yourself. Because recently I really found a gem of a company and I ended up investing in that. So in a course of 5 months, my investment has hit 5x, and now it's going in a very interesting direction. They are all set to be a decacorn. The company is called Transparent Business. So this only happened because I put myself out there and rather pushed myself to go on the hunt. So again, coming back to the network, for me, being part of an angel network, first of all, I really look at the portfolio of the angels in the network. I see how where they are placed, what kind of roles they are in, what kind of industries they are in. So, like Martin said, it's important to be getting uh, a good chain of deals to actually look at. So that pipeline is extremely important. So by putting yourself in angel networks where the angels are all in good positions as entrepreneurs or in top companies, you're giving yourself that added advantage and extra chance of getting better deals. And
Right.
again, why would founders come and ask us for investment? Again, when you're putting yourself in a good network, then the founders would find some leverage in the network, especially as angel investors. Because another company I invested in called Zoco.io, right now they got into Y Combinator, and as early investors, it's because we were a good network of angels that we could connect them to Y Combinator, and finally they got connected. They got selected, and now they have their demo day on March 2021.
Right. Okay.
So yeah.
So I mean, just to summarize for people here, what you're saying is that if you're part of a network, right? It could be a formal angel group, it could be an informal group of people. You tend to sort of leverage each other's knowledge, and founders might come to you and say, hey, that's a group of people that might actually, be able to help me out. Plus, if one of the people in the network gets the deal, he might be very inclined to share with everybody else, purely because he probably doesn't want to take the whole round by himself, right? Mm-hmm. There's also that sort of financial incentive of like, let's bring in other investors. Now, Tania mentioned earlier that she gets deals from VCs from time to time. Now, the thing that VCs do, that is probably a little bit different is that, the tier one, the big VCs, they don't need you to come in to close the round, right? They don't need you to bring in the remaining money. They probably have access to that. So, one of the questions is, why would a tier one or tier two VC come to you, Tania, and say, well, I have this amazing deal, I want to bring you in?
Okay, so on that question, I would say it is because of, let's say, the track record of consistently providing value to whatever comes my way. Again, usually the ticket that I can spare is not going to make or break the bank for this company. It's usually in the form of either a strategic business development exercise that would help enter a new market that was particularly difficult. I do have a relatively strong network across Africa, so that does help out a lot. So it's usually strategic value, or also from the consulting work that I used to do. I mean, my daily life revolves around fixing and building and improving companies. So there is not a single company that I have been introduced to, I'm very grateful to say, that I have not been able to add value to in one way, shape, or form. So the network always knows that there is something good that will come from this introduction, whatever happens, whether it's someone across the value chain that will help, or whether it's just a little bit of like operational restructuring or advisory that will just make a hell of a lot of a difference in a small period of time. And just on that note, actually, I have had a few, let's say, thank yous or rewards, in the sense that where the ticket size that I could afford at the time was a bit too small, there was always an exception made in my favor, and I could just get the allocation that I wanted based on what I did, because of, let's say, informal like advisory thank you or things like that. So that's been good sometimes.
Interesting. So I personally think that VCs are an extremely good source. I agree with Jithu that networks are a great source, but the way I see it is a little bit where through the network, you might get the deals that are upcoming, right? So these are maybe companies have really just started to fundraise, and they start through the network. So you can spot the real diamonds in the rough there through the network, through your sort of informal connections. The one thing that a VC gives you is that sort of like check the boxes, right? They did the due diligence, they like it, they have the experience, they have the team. So if they like it, no guarantees for success here, but there might be a bigger chance of success, right? And so I like that strategy. I think it's a very valuable strategy, but however, it's a difficult strategy.
But Martin, sorry if I can just jump in on this note. Actually, I have to say that a lot of the responses I've given so far are showing that yes, I have somewhat of like yes, we do follow the overall trend of the crowd mentality, but I just have to specify, especially in some cases, and Jithu mentioned this as well. There are some cases where you really have to utilize your own discretion, and I have made big bets before, at least big relative to the size of the capital that I can allocate, on companies where I think 3 VCs I know had turned the deal down, and now I'm sitting on 6x after like
no guarantees.
Just a couple of years. So
No
it's
guarantees.
like it's
true.
I always take like a little bit of a bet when I think something is special, and it's happened a few times here as well.
They exist. I agree with you. Just a real quick point on this question. You have that accelerator. You have your professional network that you leverage to get in touch with VCs and say, "Hey, I have the experience." Do you have a tip for investors who are starting, right? Angel investors who are just trying to get into the game. How could they work with VCs? What would you do if you go back 5 years in time? Or
so here we have a setup where the accelerators are usually the ones that do demo days. So that was, let's say, the very, very beginning where I used to attend some demo days for the accelerators. It gives you visibility on what's in the market. Maybe if you like a specific company, but not the team, you can also reach out to the competitor and see who's raising. So always put yourself out there in those kind of events, because those guys will also be at those events. Those men and women will also be at those pitch events. Sometimes at least the VC will send one representative, or just, just to do a little bit of active scouting. This is one way that I would recommend. And also the industry research is important, because if you do have the capital, the VC, and you do have the, let's say, the value to add, all you need is one good track record anecdote with one VC, and then it will start to snowball by itself. They will remember that okay, for entering the Saudi market, you speak to this person because this is what happens, and you will grow our investment at the same time. So yeah, here's a connection, and then it rotates and rotates.
Okay, great. That's a great answer, and I think that's very useful for people who are getting started with this.
Yeah,
with
just
this
put yourself out there. That's what I would say.
Yeah. So Jithu, do you share deals with other people?
Sure, absolutely. But then I am very choosy when I actually share deals, and I make sure I'm not pushy either. I might run deals by them, because right now I'm focusing on creating a reputable portfolio for myself. And I would rather be in a position where people actually seek my advice, and then ask me if I have any good deals they can bet on, rather than push deals onto them.
Right. Okay. Just before we continue, I wonder if there's any questions from people. Maybe people have been not willing to say anything yet. I have more questions. I will just continue the discussion. But if anybody want to say something or ask something, feel free to sort of speak up.
Just to say thank you, Martin, for the invite. I'm new to the group. Happy in I would say in the search for a good pipeline of investments. I'm based in Saudi, so if that could help any of the participants to connect the dots. I work in the oil and gas sector, and I'm interested to newly angel investor since a long period of time. That's new in the angel investment arena. So here to learn and to make some connections. And again, if I can help by any means, please feel to reach out. And anyway, I'll reach out to you to get the ball rolling.
Right, great to have you, and welcome. Okay, so Jithu or maybe Tania, I'm not sure who has more experience with the demo days. We talked a little bit about that. Who wants to say something about that? Like, where do you fit? Do you think what's the quality out of accelerators? I think Tania might be a little bit biased because she's involved in an accelerator, but let's talk a little bit about what's the quality of deals that come through these demo days, the Y Combinators. What do we get out of this?
So on that note, actually, Martin, I think I might be biased in the other direction than what you may initially think. So when it comes to the accelerators, of course, you have the household names like Y Combinator and some others where you 80% of the time will never go wrong, you know. But here in the region, and I mean, it's just purely due to the nascence of the environment and the landscape and everything, you do end up going to some events and you just walk out, and again, not to just stamp on anyone's hard work over the past few months, but then you just say like, this accelerator had this demo day to meet some KPIs, you know, like, okay, we passed the companies through the process, this is what's happening, but you don't actually come out with quality deals. I always prefer to go to not the demo days of accelerators where pushing companies in front of a panel or in front of someone is a KPI, but usually to the discussions or events that happen for companies, like you mentioned earlier, that don't really need your capital. It's more of like a strategic exercise for the companies themselves, because those entities or those startups will be pre-vetted and they will have the actual unbiased backing of the VC or whomever. So I'm actually not a huge proponent of the accelerator demo days unless it is your only option at the time. That's what I would say on this topic.
Interesting. My experience with accelerators is that the Y Combinator, let's take Y Combinator as one of the sort of big ones, right? My experience is actually that the founders that I speak to are extremely good at pitching, right? They have actually gone through that program learning how to pitch. So what you get is not all the time, right? I know I'm generalizing a little bit here, but I get founders who are actually ticking all the boxes when I'm on a call because they know what I'm going to ask, right? So you get the feeling that you're just talking to this amazing company who just ticks all your boxes, right?
And the slide follows the correct format and
like,
everything.
You know, I would ask like, oh, hey, how about the competition? Oh, that was just the next slide I was going to discuss. So here it is, right? This is our competitive, analysis, etc. The problem with this is, though, it has a different element, is that now you need to actually spend time on figuring out whether this great pitch is actually a good company, right? So, and it's a difficult process. I would not necessarily say indeed that the companies that come out of this are good companies, but they are definitely, most of them can pitch very well. So question on this for Jithu, just have you invested through any demo days, accelerators in your portfolio?
Not so far, because again, like Tania mentioned, it could go either ways. Like demo days depends on the accelerator, absolutely. So there are accelerators that I believe in. So fortunately, the companies that I've invested in so far, I've invested in before their demo day, so I was pretty early to spot that on, and then they've gone through accelerators and gone on to the demo day. But usually at that point on a demo day, what can again happen is some startups so, and then it might be at a much higher value. It has to be at a much higher valuation. So sometimes the overhype can be a killer. So that is one thing you have to be wary of.
Right, that's an important thing. What you're saying is that if you actually find a deal that everybody's looking at, it might actually become a very, very expensive deal.
Absolutely.
Do you think that's have you rejected? Would you reject a good company and say like, everything ticks the boxes?
Yeah,
it's a bit off topic here. It's off topic here, but let's talk about this, right?
I really welcome this question because it's very important. Again, sometimes when a company, I have in fact declined couple of really good deals because I was convinced the company definitely is going to make 3x or 4x in the next 3-4 years, but yet I have declined, and I would have invested probably if I had found the same company a year back. So I definitely have declined. Yes, too late. Yes.
Yeah. You're too late then in that point. Yeah. Well, it's that fine balance that we're all looking for, right? Just absolutely not too early, not too late. It's like it's like a the magic
you have to be at the right place at the right time.
Yeah. So that's same question for you that I asked Tania earlier. If you go back 3 years in time, right, and do you have any tips for the people in this group that are maybe just getting started and want to start investing? And how could they, just practically, what should they do to get started? Well, I mean, you already recommended the angel groups. That could be a good avenue. What else do you think they could do?
So I really believe in. Sorry, Tania.
No, sorry, Jithu. I thought it was me. It is actually you.
Maybe Jithu can answer that first. Yeah.
It is for Jithu.
Yeah. So again, I believe in putting a lot of study into this. So I would recommend highly to put aside, say, at least half an hour every day to read through startup journals, any hot startup journals that you can get your hands across. Please put time and efforts into that, because you never know. It's not just about sourcing good deals. It's about staying abreast with the happenings in various industries and spotting the latest trends in the startup ecosystem. So I really recommend that. Right.
That's a good point, actually. It's about trends also. It's about knowing where to seek, knowing where to look for.
Also, it's about trends globally, because you have a lot of geo-local trends that are popping up. And maybe when you look at a company that matches this trend, then that might be an interesting direction to look into. Also, I recommend going through as many webinars as possible. And so you can find a lot of interesting channels on YouTube with regard to this.
So let's I'm getting let's get to the end of this panel, right? One thing that becomes very clear is that this deal sourcing is time consuming, right?
Yeah.
You're already indicating like there's different channels. You could go to events, you could go to angel groups, you could talk to VCs. How do we limit this time, right? How do we use our time as efficient as possible? Let's talk about this. And I have two questions for you guys for that. The first question for me is, and maybe this one for Tania, is when you started investing, did you have a thesis? Did you sort of narrow down what you were looking for in order to say, maybe save time because of that, right? Or were you like, no, let's look at everything that comes on my path? And this is specifically important when you're in your first 6 to 12 months of angel investing. What was your position at that point?
So I would say I did not have a very specifically worded or concrete thesis. I just knew I had one rule, that there were specific industries I just don't go near for many different reasons. But anything that fit the industry scope that I was open to went through, again, a very quick POCD scoring, the team, the opportunity, the context, the deal. If it scored highly enough, I set a threshold there, then it was a go. It wasn't necessarily something that I had to be super passionate about. A good deal is a good deal, depending on how it scores against a slightly methodical structure. So I'm very methodical to begin with. So that's what I employ from day one. I have a few criteria that are super important. I score based on that. And if the deal satisfies that score and does not fall in specific industries, which I simply just do not go near, then it's a go, even from day one.
Interesting. Do you feel that now, looking back at it, you would wanted to have a narrower thesis, or did your thesis become more narrow over time, or is that sort of
it did become more narrow over time? I am, let's say, slightly more industry focused now. But yeah, I mean, more than just becoming slightly more focused industry wise, I would not say the actual thesis, or maybe the deal size as well, like the deal size, the desired return. Those are just the things that are formulating how I do things. And sometimes I also have a preference for the instrument. I really like investing via convertibles. And DriveLa is actually the first investment that I have that I'm not on the cap table, and I don't have super direct interaction with the founders. Usually I have a super, super close and direct rapport with the founders themselves. So it's just a more a modification of the approach rather than the thesis itself.
Right. I think we can have a different webinar just to talk about investment instruments. Maybe that's something we could, because there's so many different options
Oh.
and pros and cons. It goes way out of scope for this webinar though. But you touch an interesting point there.
But yes, Martin, sorry if I can just add something that I think might be valuable to everyone, especially if there are a few people starting on their angel investment journey here. There is a book that I love, and it's quite easy to digest, in my humble opinion. It's called Venture Deals. This book will explain almost everything you need to know about investing, about the structures, about the instruments, about what to look for, what to evaluate, how to put. And for anyone who's looking to just start off on this, especially on the angel investments space, I think this would be a really good book.
Great. Mar, let's share that tomorrow in an email. We'll find the book title writer and we'll share that with everybody.
Yeah, definitely. Okay, sure.
Okay, final question. Jithu, same question for you on thesis. How was that for you and where are you now?
So I like I said, I usually don't narrow it down. I'm all about keeping the funnel as wide open as possible, but then I have a few metrics, again, like every investor has. So the first half an hour, I have a few pipeline of filtration processes, and then as in when it passes all these checkpoints and checklists, then I believe in spending more time on learning whether the startup is worth the investment or not. So I believe in keeping it as wide open as possible.
Okay. Let me end with a sort of anecdote on this topic, and then that's it for the panel. I've been debating for myself whether we should focus on a certain industry and we should focus on a certain trend. And you can. It's an approach that works, right? But then on the other hand, if I would have asked you 10 years ago whether the taxi industry would have been an interesting industry, you would probably have said no, right?
Exactly.
But then you might have missed Uber, right? So there's a quote from an investor. I forgot his name. I believe he's with the. Doesn't matter. I think he's with some VC. But he basically says, I don't have a glass ball, but I know when lightning strikes, right? So I don't know what I'm looking for, but when I see it, I will know. Right? I let the founder convince me, and I think with that I want to end this this panel. Thanks, guys, for this. Let me real quick check if anybody in the group has an urgent question or wants to add something to this. If not,
hello.
Yes, please.
Hi everyone, Rahman from Riyadh, Saudi Arabia. Part of my my previous job, at least, is to evaluate new ventures from the social and environmental aspects, and any new project, any new acquisition. My part of the process is actually to do the due diligence on the ESG, especially the social and environmental part. Now, I'm starting a new journey after one tiny experience with a startup. Usually all the deals and projects are huge projects and big projects for big companies. But now I'm starting a new journey to attract investors to startups like climate startups or ESG startups. What's your advice on this? How can I navigate this new venture for me, and how can I make this balance between ESG and the rest part of due diligence?
Okay,
I hope my
thanks for that.
question is clear. Sorry.
Yeah, Jithu, Tania, anybody, one of you guys want to take that question? So the question is on, is it clear to you?
I can maybe add on to that. So basically, again, I believe in making sure you build a good reputation. So first of all, getting as many deals as possible. I mean, create the funnel and make sure the first few investments are really spot on. That is one thing that you have to do as an investor. So your first few investments have to work. That personally, that is my opinion, and that's the phase that I believe every first few investors, angel investors, are in. So the first few years are extremely decisive. That's one of my opinions. Yeah.
So and maybe for you, Tania, do you have a sort of ESG sustainability? Is that one of your check boxes that you have when you look at a deal? Do you check whether they have that sort of impact sustainability element?
It's not a deal breaker for me if they don't, but I was actually just recently working on a massive deal in that space. It's out of Ethiopia, Romania, and the US, and it has like huge ESG impact. So yeah, I mean, it's very nice to meet you, Abdurrahman, and very happy to discuss this further. I'm very sorry I didn't hear the second part of your question. So if you have something specific you want to ask me on that front, please feel free.
Sure. I was asking about the balance, how I can strike the balance between the ESG and the rest part of the due diligence, like the financial part and the legal part. You don't want to be so taken by the purpose.
Exactly.
But at the same time, you need the purpose to be there.
Right.
No, absolutely. I completely agree. And I would say that there is absolutely no concrete formula to follow. It's more on the actual, your own thesis and what criteria score higher for you. Again, it's not like a charity. You're not going to make a deal. You're not going to invest in a deal that's not a good deal. But at the same time, some strategic factors can weigh in more, like the future of our planet and everything. This is extremely important as well. And I strongly believe in that too. So yeah, I would say that there is no concrete formula. It's just a matter of establishing a balanced enough scorecard that allows you to reach a threshold. Like my humble advice would say, give yourself if you usually want to sit at 6x on an investment exit or 8x, then maybe an ESG impact one would maybe be at 5x, but that's still worth it for you. And then work backwards on what would get you to 5x.
Yeah. Yeah, that's a great advice. I'm fully with Tania on that. It's a challenge to find good ESG deals. It's a challenge to find good deals in general, but you add that impact sort of sustainability to it. It becomes really hard, because what you have to be wary of is that there is a lot of founders who are using this ESG impact type of wording, to get your attention. Right, to send it around and say, like, this is, we're making impact, but when you look deeper, how many of these companies are really making impact? So be careful when, and that's just what I want to add on, be careful when founders share with you and say, we're impact, we're sustainability, we're ESG, because do they really have that?
If I may add, again, this like Martin said, this has been a trend. So a lot of companies have used this as a bait to get investors, but there are companies who are startups that are genuinely focused on ESG, and there are a lot of success stories there as well. So I mean, you spot the right company. Again, there's ESG companies do have a trend, or it's a trend of the future. So genuine companies, I believe, have a lot of growth potential, and there are really good companies worth investing in.
Okay, thanks for that.
Jeremy is having a question. Jeremy?
Yeah, I just want to quickly ask you guys, do you have a way that you model the multipliers on what people are pitching to you? Like, how do you justify the modelings? Is there a specific way that your model? Is there a table? Is there a format?
So what yeah, just to clarify, what you're saying is, how do you calculate the returns? Is that what you're trying to ask?
No, when somebody pitches to you and then they show you like a forward number, is there a way you analyze the data? Is there any way that you justify the valuations?
Fair enough. So this for a bit more of a financial, from a financial side. Who wants to take that question?
I can. I don't mind.
Yeah,
So hi,
go
Jeremy.
ahead.
Thanks for your question.
Hi.
I am a finance background individual, so I usually rip up the business case and make sure that every single number in there is valid in terms of the methodology of the planning and the assumptions used. But at the same time, I have never and will never see a startup accurately predict their financials for for the going future. So I think here, as long as you're looking at a business case that has sound assumptions, and as long as they're not valuing themselves too high compared to the comparables or the other benchmarks or the exit multiples they're proposing for similar deals in the region, then you should be okay. But to come and tell you that there's an exact formula, that's not true. You'll just be able to say this is good, bad, very inaccurate, or concerning. Because if a company is telling you we're going to exit at 12x and then the closest comparable exited at 3x or something, it's you know, you just need to be able to gauge what makes sense and is going in the right direction. That's what I would say on that.
Thank you. I just want to add to that Jeremy, part of you and also for other people in this call being part of a network like this is also because we can actually give you the opportunity to share such a deal with a group of people that might be interested in that deal. So for you, Jeremy, but for anybody else in this call, if you have something that you're working on, you're looking at a deal and say, hey, you know, I get the business, but I'm struggling with the finances, or the other way around. Actually, feel free to reach out to us. We'll have a look. We'll share it with the network, and if we have 5, 6 people who are interested to look at that deal, you know, we can do a webinar together and just, you know, sort of dig into these numbers and get other people's opinions. I think this is what we're trying to do here, just to help. So I think, you know, HH Angels is open for that.
Yeah, the reason I ask is because like a lot of people pledge on their forward contracts, but forward contracts I see has a high chance of terminations. There's a lot of clauses behind it that we are not seeing.
Yes.
We just see the forward numbers.
Yes, you got to be really specific on your due diligence. I think that's the key. There's a lot of good founders pitching and sharing good stories, but you really got to dig down and try to see what's really written down in the contract. Okay, for sake of time, guys, we need to start working towards an end. There were a lot of prospects, new members, people interested in this call. We're very happy for that. Thanks for joining. We'll be happy. We'll reach out to you individually and also discuss, you know, what HH Angel is all about, because this webinar is just one of the things that we're doing. For all the other people, feel free to invite friends, network connections to these calls. You know, it's growing. It's, you know, we see a lot of value in it. We will be sharing a feedback email tomorrow morning, just a questionnaire. Feel free to let us know how we can improve. And as a last point, you know, if ever you have any questions, we have a WhatsApp group. Mahar is here. Joanne is in this call. I'm in this call, but we're also all in the WhatsApp group. Feel free to talk to us individually with any of your concerns or ideas that we can address. Other than that, I'd like to thank everybody for joining today. Thank you very much, Tania. Thank you very much, Jithu, for helping out, for joining this panel and sharing your insights. And we'll be looking forward to seeing everybody soon again in whatever setting that may be. Thank you very much, guys. Have a good evening.
Thank you very much, everyone.
Thanks a lot.
Thank you.
Bye.
Take care.
Bye-bye. Bye-bye.
Thanks, guys.